to us about how Pinduoduo fits into the broader e-commerce landscape in China. Are they a real threat to Alibaba and JD?
I think Pinduoduo really addressed the market segments haven't served very well by Taobao or Alibaba or JD, which is how to effectively find merchants at a good price. And the model they had leveraging the social network, and it's referred by the friends and aggregate the demand from the consumer very quickly. So the supplier, the sellers, they can provide the merchant the products at a very attractive price to users. And that model never has been worked before, and this is a company that really addressed that market. And so you see the biggest user demographics is third tier, fourth tier city, which is really the driver for growth for mobile internet. The first tier, second tier city mobile internet user growth is slowing down. So this is a company that really has a lot of potential.
Is there a good comparison here in the United States?
No, this is really an original innovation. My partners here at Lightspeed is always trying to figure out how we can make it work here in the U.S.
So it would be like if there was a new budding Amazon, but popular in the middle of the country.
That's right. And think about it. This is a company started 3.5 years ago from ground up. Now it's a public NASDAQ company with $28 billion US.
Why doesn't it work in the United States?
I think there's a potential. And certainly there's a benefit for all the sellers are in China. And you see, if you go to Walmart here, and a lot of products made in China, right? So the merchants are actually available. So when you build an e-commerce platform marketplace, it's easier to do that in China.
Where do you think the biggest opportunities in the China tech scene are right now?
I think there's continuous consumer internet opportunities, but increasingly we are seeing enterprise and deep tech actually is picking up.
How is the trade war, the trade tension impacting your job?
Surprisingly, we just raised our fourth fund at the beginning of the year, $560 million US. And I was a little bit surprised that the biggest demand is from the top institution investors from US.
Why do you think that is?
I think people really realize that and also recognize China is becoming one of the largest venture investment markets. And the return in terms of the growth for early stage particularly is very, very attractive. So you want to get into the top funds, you need to deploy that. So it's a long-term investment, and people see that opportunity.
Do you see the difficulty for U.S. investors to navigate China and the bureaucracy and the regulatory issues to change anytime soon? It certainly doesn't seem like the Chinese government is backing down.
I think that's why they look for the top VC managers, and in terms of investing these top internet companies or deep tech companies, actually we see the regulation is getting more relaxed. I think certainly to some degree there's a pressure from the US side, right, on China to open up the market even more, and but we're seeing that trend is actually more favorable for US investors.
You worked with Kai-Fu Lee at Google China, and he seems to think that it's basically impossible for Google or Facebook or many U.S. tech companies, even Amazon perhaps, to succeed in China at this point, Airbnb even. Would you agree?
Yeah, I tend to agree because I started at Google 2003. I was the first chief representative for Google China rep office. And, but if you look at all the internet companies from U.S., they have the mentality that it's working in the U.S. and it should work in China, but the market is very, very different. You look at Pinduoduo, you never imagine something like that in the U.S. So they are not structured to compete with the local competitors.